I've been asked 4 times this week if the Calgary real estate market has slowed down, and my answer every time, yes. But it depends. Before you start throwing out lowball offers or stressing that your home won't sell, let's look at what's really happening, using real, cold, hard, objective facts. This is your October 2025 Calgary Market Update. In this video, I'll break down what's happening across the Calgary market overall, how different parts of the city and surrounding areas are performing, and what to expect at different price points. And finally, I'll show you the hottest areas and product types for sellers, along with the best opportunities for buyers this October. The benchmark price in Calgary is sitting at just over $572,000, down about 4% year over year. Now, that might sound like a big drop, but keep in mind, last year we hit record high prices, so what we're seeing isn't a crash, it's more of a correction. But the benchmark price alone doesn't tell the whole story. In September, we had 1,720 sales. That's down 14% compared to last year. At the same time, new listings hit 3,782, which is actually up 2.6%. That puts our sales to new listings ratio at about 45%, and anytime we dip under 50%, inventory tends to build. And that's exactly what happened, climbing nearly 4% from August to September. We now have just under 7,000 homes on the market, levels we haven't seen since 2020. That might feel high, but it's actually similar to what Calgary saw back in the late 2010s. To really understand the market though, we need to look at months of supply. Basically, if no new homes were listed, how long would it take to sell everything at the current pace? For the first time since 2020, Calgary crossed just over 4 months of supply. In our market, under 2.5 months is a seller's market, between 2.5 and 4 months is balanced, and over 4 starts tipping in the buyer's market territory. So are we officially in a buyer's market? On paper, yes, but that's not the full story, and here's why. Demand has slowed, partly due to slower population growth and market uncertainty. But slowed compared to what? Compared to one of the fastest growing housing booms Calgary has ever seen. In 2024 alone, about 80,000 people migrated here. And here's the thing. Most people don't buy the minute they land. It's common for newcomers to rent for 1 to 3 years before purchasing. That means a lot of the demand is still sitting on the sidelines. Even with the recent slowdown, sales are still higher than they were in 2015 to 2019, while inventory levels are about the same. That doesn't look like a crash to me, and if I were betting, I'd say Calgary is more likely to see pockets of competition, even bidding wars, depending on location, price point, and product type, than it is to see fire sale prices across the board. Prices are down across the city, but some areas have been hit harder than others. The largest year-over-year benchmark price drops are in the north, northeast, and east regions, down 6%, 6.5%, and nearly 8% respectively. Compare that to the northwest and the west, where prices are only down about 2%. With the citywide average sitting at a 4% decline, you can already see how location matters. Now, why the difference? The north, northeast, and east are some of Calgary's fastest growing areas, with more space for new development. In contrast, growth in the west and the northwest is limited. You run into indigenous land to the west and acreage communities like Bearspaw to the northwest. The product mix also plays a role. The north, northeast, and east have more row townhomes and apartments, while the west and northwest lean more heavily on detached and semi-detached homes, which are a little bit more resilient in Calgary's market. Now let's zoom out to Calgary's surrounding cities, because many of my clients are looking at these markets as well. The north, east, northwest, and city center areas of Calgary, along with Airdrie, are just tipping in the buyer's market territory. Buyers in the northeast, Chestermere and Cochrane, have even more leverage with months of supply over 5. Now, Okotoks is the complete opposite, the only area sitting in a true seller's market with under 2.5 months of supply. Meanwhile, the west, southeast, and south regions of Calgary are holding steady in a balanced market. So depending on where you're looking, the experience can be completely different. And if you'd like to dive deeper into what these numbers mean for your specific area, whether you're thinking about buying, selling, or just keeping an eye on the market, let's connect and I can walk you through it. Understanding how location impacts market dynamics is one piece of the puzzle, but Calgary's market is complex. And to really understand what's happening, we also need to look at price and product type. When we break the market down by price range, 2 things become clear. Which price ranges people are actually buying in, and how the market is behaving at each price point in terms of months of supply. And here's what stood out to me. Most sales are happening in the mid-range, between $400,000 and $700,000. Not surprisingly, months of supply here is balanced. That price range usually represents smaller detached homes and row townhomes. On the lower end, $200,000 to $400,000, mostly apartment-style condos, the market tips into buyer's market territory. And on the higher end, above $700,000, like larger single-family homes, we also see a push into buyer's market conditions. But here's the interesting part. In September 2025, we actually saw slightly more sales over $1 million than we did in September 2024. That lines up with what I mentioned earlier. Many people who migrated here from Toronto or Vancouver in 2024 likely rented for a year or two before jumping into the market with the equity they brought from back home. So price, just like location, paints a very different picture on what kind of market you're really in. Now, I'll be breaking down each product type in more detail in separate videos this month, so make sure you subscribe so you don't miss those. But I promised at the start of this video that I'd share the hottest areas and product types for sellers, along with the best opportunities for buyers this October, so let's get into it. Let's start with detached homes. If I was selling a detached property right now, the strongest leverage is in West Calgary. Months of supply sits at 2.98, balanced but leaning towards a seller's market. And prices are actually up slightly year over year, while most of the city is down. A standout micro market is Garrison Green, where last month there were 3 sales but only 2 new listings, so just 0.33 months of supply, with a benchmark price just under $1 million. Another hotspot is West Springs, where September saw 9 sales against 8 new listings, finishing with 1.56 months of supply and a benchmark price of over $1 million. If you're buying or selling a detached home in West Calgary, there is going to be demand. On the flip side, if you're looking to get into a detached home, some of the best leverage for buyers is in Northeast Calgary. Communities like Castle Ridge, with a benchmark price around $505,000, are sitting at 16 months of supply, giving buyers plenty of negotiating power. Redstone also has one of the highest months of supply in the city. Even parts of the Northwest are tipping in the buyer's market territory. For example, Rocky Ridge currently has 7.33 months of supply, giving buyers some real leverage despite prices being slightly up year over year. Next, apartments. If you want to talk about a buyer's market in Calgary, this is it, especially in the Northeast and East. But 2 things are worth noting. City-centered condos are also firmly in buyer's market territory, but they've held on to the most value with only a 5% decline year over year. That could be a good place to use your leverage while protecting long-term value. Now, Southeast Calgary condos are kind of bucking the trend, sitting in balanced market territory at 3.22 months of supply with a 71% sales to new listing ratio. If you already own a condo in the Southeast and you're looking to move up, the right pricing and marketing strategy could get the job done. Now, semi-detached homes. This has to be one of the most resilient segments. Many areas are still up in price year over year, and those that are down have seen smaller declines. Thanks to steady infill demand, one of the hottest areas here is City Center. Surprisingly, the East has also been strong, with a sales to new listings ratio of 53% and 3.63 months of supply, and a benchmark price under $390,000. Buyers who want to avoid condo fees but aren't ready for a detached home are looking here. The Southeast semi-detached market is also a solid option for move-up buyers, offering homes nearly $200,000 less than detached properties in the same area. Finally, row townhomes. These have been popular with buyers priced out of the detached or semi-detached home market. If you're selling in South Calgary, you're in great shape. This is the only strong seller's market in the city at just 1.83 months of supply. The East is also trending towards seller's territory, but it's not the same everywhere. The Northeast is flooded with inventory, giving buyers a ton of leverage, while the Southeast sits at 4.61 months of supply. Technically a buyer's market, though homes here carry a higher benchmark price around $451,000. Calgary isn't a one-size-fits-all market. It depends on where you are, what you're selling, and what you want to buy next. In my next videos, I'll break down each product type in much more detail so you'll know exactly how to strategize in your part of the market. If you found this helpful, make sure to like and subscribe so you don't miss those breakdowns. And if you'd like to have a conversation about your specific situation, whether you're buying, selling, or just curious about your area, my contact information is in the description below. I'll see you in the next video.